Rod North is the Executive Director of Bourse Communications and he joins us now in the studio to talk about finance. Rod, good morning.
Good morning.
So the local market's doing all right?
Well, it started to look pretty good yesterday where we saw quite a significant increase, about 1.8%, which was great. And we particularly saw some activity in the bank shares. They were up overall by about 2.5%. But just as a bit of momentum gets going, we have a Wall Street night where we've seen Wall Street drop 140 points. So, and that brings their Dow Jones index back to sort of close to 10,000. So I think it just highlights how markets are still pretty, muted in respect to, where the future direction is going to be. And I think it's really not clear. We've just come off the back of the reporting season. In fact, today's the last day for companies to get their reports in Australia. And generally those companies that leave it to the last day probably reports that perhaps they really didn't want to get out earlier. So there's probably no joy there. And then we go into a bit of a flat spot for a while. And of course, with the big unknown about election results and, ultimately which party will lead and what direction there'll be, particularly with things like the mining tax and so forth. I think we come into a pretty flat period for the next month or so.
As a finance journalist, it was always fun being near a stock exchange computer at about 5 p.m. on the last day of reporting season for all those last-minute stocks that basically were dogs and had nothing but bad news. So
people generally try to hide that information, but overall the reporting season has not been too bad because we saw the business indicator information come out yesterday showing an increase of nearly 19%, which was as a result of improved profitability. So all the signs are there, but I think the protracted nature in which our markets are going to take to fully recover, the uncertainty that still sits in respect to the US, the talk of a potential double dip and so forth, I think makes people very nervous, and people don't like uncertainty, and markets react quite a bit like a roller coaster ride. In fact, you never quite know what's going to come up the next day.
I know, and the skittishness is kind of difficult to understand sometimes because, as you're pointing out this morning, if we look more soundly at the profit situation of Australia's companies, it's actually pretty good. I mean, there's not a great deal to get spooked about.
No, they're very sound, and of course the information you were just talking about before about shortages, particularly for the mining sector as well, going ahead. I mean, they're all good signs, that Australia, in particular, is probably still a standout, in terms of the rest of the world. We really have sort of weathered it quite well, although, it's still a difficult climate for people to operate in.
Now we're expecting closely watch retail sales figures out today.
Yes, we've got retail sales and building approval out today. There is some expectation that retail sales might be slightly up by 0.2, but building approvals are expected to be down. And then, of course, we've got the big number tomorrow being the GDP for the June quarter.
Yes.
And there's, an expectation that that number will come in at 0.8 to sort of 1%. Which will give us an annualised growth rate of 2.9%. Now that makes us pretty much the envy of the rest of the world when we can put those sort of growth figures in relative to our trading partners.
Looking at the growth rate of Singapore the other day, it just doesn't bear repeating. It's just phenomenal. I know it's a tiny economy and a tiny place, but boy, some places really got through the GFC unscathed, didn't they?
They just seem to know how to do it better than anyone else, don't they?
Yeah, absolutely. The outlook today for the share market,
The outlook today, futures are showing a decline of sort of 1 to 1.5%, so no great joy today.
Okay. Rod
Probably
North,
a good time to have some lunch.
All day. Thank you.